Yeah, sit there. I was like, who's gonna whisper the rules of order to me? All right, we'll call the meeting to order, the Retirement Board of Allegheny County, and we will stand, if you're able, for the Pledge of Allegiance. I pledge allegiance to the flag of the United States of America and to the republic for which it stands, one nation, under God, indivisible, with liberty and justice for all. Walt, would you take a roll call?
Yes. Ted Puzak. Corey O'Connor.
Amy Wise Clements here on behalf of Corey O'Connor.
Sarah Inamonrado. Frank DeCristofaro.
Present.
Jennifer Liptak.
Here.
Sarah Roca.
Here.
Erica Broslers.
Here. Do we have anyone signed up for public comment?
We do not.
All right, moving on to board approvals. Motion to approve board meeting minutes from April 18th, 2024 board meeting.
Make that motion.
Second. Hearing a motion and a second, is there any discussion? All in favor, say aye.
Aye.
Any opposed or abstaining? The motion passes. Next is a motion to accept the financial statements, which include the pension fund assets, the statement of changes in plan net assets, and the RBAC balance sheet for March 2024.
Make that motion.
Second. Thank you. Hearing a motion and a second, do we have any discussion? Hearing none, all in favor say aye.
Aye.
Any opposed or abstaining? No, the motion passes. Last is the board approval section. Motion to approve the May 2024 invoices in the amount of $313,708.13 and submit for payment.
Make that motion.
Second. Hearing a motion and a second, is there any discussion? All in favor say aye.
Aye.
Any opposed or abstaining? The motion passes. Next, we have applications. Looking for a motion to approve the May 2024 applications, which include 3 early voluntary, 11 full retirement, 1 disability, and 1 payment plan.
Make that motion.
Second. Hearing a motion in a second, is there any discussion? Hearing no discussion, all in favor say aye.
Aye.
Any opposed or abstaining? The motion passes. Reports. Walt.
Thank you. If you turn to the manager section of the board book, I'll highlight some areas on the dashboard for the month. So retiree payroll was up 8% at $11.9 million as compared to $11.42 million this time last year. Contributions are up 9.11%. Contributions refunded are up 12.47%. Total retirements are up on the year, 20.39%, 124 this year compared to 103 last year. If you turn to the next page, pension estimates are up 8.52%. Capital calls as of the last meeting were $390,366.27. I've also included a new section under the investment section of the dashboard as distributions as requested at the prior meeting. So our total distributions year to date have been 31 for $6.3 million. There's also a section under Mr. Boyer's report that lists them all out, but I know we wanted to capture it in my report just to list out distributions. So moving forward, then we'll just add to it monthly for the year. Then next year we'll have a comparison. I have the office budget as of April 30th, 2024. Are there any questions on the dashboard and or the budget?
I had a question back to the investment section.
Okay.
Thank you for putting that in and detailing the capital calls and the disbursements out of the private equity portfolio. What is the termination section?
So the terminations were the 2 managers from last meeting that was recommended by PFM to terminate. So that's an estimated amount of what the 2 investments were worth.
Okay.
I'll have a final number once we get them liquidated.
Thank you. I had, I don't know if this is for yet. I know you all had moved to updated pension software, and I was wondering if there's any updates just on how that's going since
So
it's
the
been in
updated
effect.
pension software is going well. We're having weekly meetings with the Coriac team coming into our offices. We just had a bunch of enhancements that were completed earlier this week. There are a few more we are still working on, and we're anticipating a beta test of the new online calculator sometime in June or July. We're planning on pulling down the current calculator with Tyler Technologies at the end of the month. So I know that we'll have a lot more calls and so forth coming into the office, but we don't want bad data going out to members.
About how many do you have online monthly at this point? Do you have like a-
We haven't been able to track it as well since Tyler doesn't support us anymore.
Okay.
But I would, on average, probably say a couple hundred, because most people that do run them will call us to verify what their estimate is. So it's a pretty high number.
And is that open to actives and
So
terminated, or-
estimates are just open to actives,
Okay.
and you have to access it from a county computer.
Okay.
And the new Coriac software will be a similar, where you have to be able to log in, get a verification code, and then I believe log into the new system.
Thank you.
And we are developing, probably later in the year, like an online retirement portal as well, that retirees can log in, update beneficiaries, and so forth.
Thank you.
You're welcome. And then I have 3 items. One's for board approval, the other for review. So the first is requesting the acceptance and vote on appeal number 2024-1, in which the board, having received and reviewed a report and recommendation, vote on whether to approve and adopt the proposed findings, conclusions, and recommendation of the hearing officer in appeal 2024-1, thereby denying the appeal.
And as a reminder for those with packets, this is in that separate manager's report piece that's like a handout. So we're looking for a motion
A
to
motion to accept and deny the appeal.
accept the recommendation and deny the appeal.
Yes.
Yeah. Do we have a motion to accept the recommendation that we deny appeal number 2024-1?
Make that motion?
Second.
Hearing a motion in a second, is there any discussion? Hearing no discussion, all in favor, say aye. Aye. And any opposed or abstaining? The motion passes.
Thank you. So next on the list would be requesting the board to review the proposal with W tax. This would be to monitor and reclaim tax on foreign investments. I've included the proposal to review for the next month. I have reached out to one other firm and have not had a response back yet, so we will try to get another proposal as well. But what this is for any investments in foreign countries, this service would go out, reclaim these funds for the board, and then they keep a percentage or a fee off the total claim that they get for the year.
And can you all remind us which funds we hold where there's this sort of investment that generates this sort of situation?
So this,
Yeah, it was all of the current claims that triggered this search came from Siegel, Bryan, and Hamill. So it's only related to international equity investments.
And so how much do we have at Siegel, Bryant, and Hamill?
40
million.
Okay. And do we have a feel for how much in taxes? So these are international taxes that the fund sort of has to pay at the time, and then somebody, us, has to go requesting them back, right?
correct.
And it's very hard administratively to do that in a whole way. Do we have a guess at how much in taxes
Right.
is out there?
This year it was around 100 to 120,000.
Okay. And so from our conversation, from this vendor W Tax's experience, retirement boards are bad at getting this done.
And it's not so much that the boards are bad. It's the custodians at a point now don't recommend tax advice, so they kind of tell you what needs done. But what this firm would do would have access to the BNY platform. They would be on top of it and looking for them more often, other than just being told 3 months before it's about to expire.
I would also add that since they're proactive and it's not the 3 months before it expires, a lot of the requests are for, or I should say, are related to dividends that were paid 3 years in the past. And so part of the value proposition is getting the money that, sound like a personal injury lawyer, getting the money that you deserve today rather than waiting for 3 years. And, if you discount that by, 5 or 6%, it's very meaningful.
And what's the question? So this is the return we see on your report, and reflects the fact that taxes are collected and we're not getting earnings on that. So is it fair to say that what we see as return for this fund reflects the money that we're basically paying these taxes and never getting them back?
Correct.
Okay.
Yes.
So this will be just like enhanced return effectively?
Yes.
Okay. And I know Walt, as he was looking into this, was having trouble finding any other vendors.
Yeah.
I just today messaged someone I knew, and they gave me a name that was like S&P something, so I can touch base with you on reaching out to them. But it sounds like a rough field.
Right. And I think the other vendor that Walt referenced was a vendor that I spoke with in the past. Another one of my clients has a similar issue.
Yeah.
And long story short, of course, you should look at multiple vendors if they're available. I would not recommend them.
And can we check on if this vendor that we're talking about is on CoStars, or is there any other due diligence that Jen or anybody would recommend?
I just think that, I don't know what the value of this, they earn based upon a percentage of the.
They earn a percentage based upon,
15%.
So I think the best practice would be is to solicit proposals, review them, have your experts provide some type of matrix or review, and then make a recommendation. I think that's the safest thing to do, right, to make sure it's a fair process for everyone.
okay.
Amy, right? Yeah, I agree. Okay.
Okay, so Walt and I can touch base on how to solicit proposals there. Thank you.
And then lastly, I have the, excuse me, the 2023 annual report. So I was going to ask for review, but soft approval today, that if there's no changes, we can get that mailed out early next month. Because the printing process and the mailing would probably take a few weeks, so I'd like to get it out by midsummer. Or I could bring back for approval next month.
I looked at it. It's
Yeah,
it's a very similar report. I can't speak to the accuracy of the numbers. That would be.
The controller's office reviewed the numbers, so.
Yeah, I have a few comments that are probably just like formatting or that letter from the president page. One question I did have, and I don't know if this is the forum for it. I know we've been at 7.75% historically, and my understanding is there were potentially discussions at the end of last year about if that makes sense in the longer term, and if someone who's been on the board longer could refresh my memory as to where those either discussions landed or at what time in the calendar year we look at that rate.
I'll also provide, opportunity for Brad if he chooses to comment, but generally those discussions occur when we're reviewing contribution rate, which we set annually. Sometimes we have a mini review part year, just depending upon, but it's usually in consultation with our actuary where we talk about that specific amount. And we have talked about that for years. We most recently talked about it again, about whether we should adjust it or not. So that can begin as early or as late as wherever, but it would be applied
Sure.
whenever we would decide to change it, right? And we would have to do that via an official board action to adjust that rate, and then it would be applied at the period of time, right, I think would be recommended by the actuary, right?
Take a mic.
Yeah, I think a logical time frame to readdress those conversations would be as we get into the valuation for 2024, which is something that happens kind of late summer, early fall, as we go to complete that valuation. We're in the process of a census update now, so we can bring forward some items to on a preliminary basis around that time. And if a decision is made to adjust that, we can reflect it for measurements as of 1/1/24, which would then get built into the projections and calculations we do for that contribution rate.
Right. I do want to note that recommendations have been made and accepted by us, but made by our actuary related to changing how he calculates like life expectancy,
Yep.
things like that. And that was most recently incorporated into some of our valuations, correct?
That's correct, yeah, we updated that to the most recently published table within the last couple of years, so that side of it is taken care of.
The good thing is people are living longer. The bad thing is
Yeah.
it doesn't help our pension, but the good thing is
right.
people are living longer. So there have been adjustments, I will
Yeah,
say.
yeah, oh, yeah.
That have occurred. We usually take those recommendations from the actuary. Thank you.
Thank you, Jen. Thanks, Brad.
Yep.
So do you want me to bring the report back next month for approval, or are we good approving and just making?
Oh, sorry, yeah. If we're okay to, I'm like looking for some words. Yes, is there, so I'll have some, I'd say minor editorial
Yeah.
comments, but aside from that, if we're all good with the overall content of the report, I'd be looking for a motion to approve the 2023 annual report.
Make that motion.
Hearing a motion in a second, is there any further discussion? Hearing none, all in favor say aye. Aye.
Aye.
Any opposed or abstentions? The motion passes.
That'll just be, there may be some technical corrections to the letter
Yeah.
that has your name on
Yeah,
it. Okay.
yeah, thanks, Jen.
Thank you very much, and that's all I have this month, unless there's any other questions.
I had a question about the board seat that Ted
Yes.
will not be running again. And can you give us an update, or maybe you can't because I know the deadline's tomorrow. Any variety of update you'd like to
I
provide?
can provide an update. So we've had 13 individuals request the nominating packet. We've had 3 returns so far. Once we validate all the signatures next week, the board will get an email and an update on who did turn in, whose was validated, and who will be appearing on the ballot. On Tuesday, May 28th at 11 a.m. will be the die cast at the elections office to have ballot position. After that, the ballots will be printed and sent to the mailroom for mailing, and everybody will have, I believe it's until the last Friday in June at 4:30 to turn their ballot in. Once we have them printed and it leaves, our office, elections pretty much completely takes over and handles it from there.
Sorry, could you say the mail date again, or the approximate mail date?
The approximate mail date should be the week of Memorial Day. So
Okay.
I would like to get them out by Friday the 31st if I can, depending upon what the mailroom and the print shops.
Great.
But then by Friday, June 28th, they would be due back by 4:30. Then the vote count would be Monday, July 1st in elections.
Okay. And historically, has any of this information been put online about the people running or
They
or
get,
when ballots are due? Or
when
anything?
yeah, so the election timeline that we approved in April is all on the website
Okay.
and posted in our hall. When the ballots go out, there'll be biographies on each one of the candidates.
Okay.
That's kind of our telling everybody who's running, and that's all included in that packet.
Great. Thank you. Anything else for Walt? Thank you, Walt.
Thank you.
Next up, we have Mr. Brokaw. And, oh, no, I tried to skip Brian. Sorry. Next, we have Brian Gabriel, our solicitor.
Thank you, Erica. The solicitor's report is current as of May 9. I would note that the primary updates are really on the back part of the report, starting at page 8. So they would include 7A, 7D, 8A through 8E. In terms of, there are 2 items where we anticipate they would be on the June agenda for the board's consideration, and those would be at 8A and 8C. And 8C is the draft resolution that's attached to the solicitor's report for the board to review.
Page 11.
Yeah. Generally related to employee service buybacks, is that a thing that's initiated by an employee, or does the retirement office, like, get a flag when somebody gets rehired? Like, here's a rehire, they should be offered a buyback? Like, in the regular universe, how does that usually occur?
So the way it would occur is we go over that at orientation. So when employees do come back, they have that option.
Okay.
If they call in and request it, they have the option.
Okay.
But we do notate in every new hire orientation, you have the ability to buy back prior service time, military time, and so forth.
Okay, so it's not the retirement office's responsibility to identify
No.
people who would potentially be eligible for a service buyback? Okay.
I could just speak real quickly to the infamous T number that we all call, you have your J.D. Edwards employee number and your T number.
I like my T number.
We still keep T numbers because the retirement office needs their T numbers. So there's some due diligence when someone's rehired to make sure that we get that T number so that we have consistency with the retirement office.
Okay, so they get their old T number back effectively, okay. Let me look at a couple of my flags. That's all my questions for now. Any other questions on the solicitor's report? Thank you, Brian.
Thank you.
Oh, I did have a solicitor's report related thing. Last month, we circulated in the packet some draft bylaws, and I just wanted to take the board's temperature on if they'd like to discuss bylaws, like, as a whole committee, or if we'd prefer a subcommittee for that. I was curious if anybody had thoughts. A room full of non-strong opinions. All right, well, let's read them, and next meeting we'll take comments. We'll have some time on next month's agenda for going over the draft bylaws. Thank you, Brian.
Thank you.
Next up, we have Mr. Brokaw and Mr. Walters from Mariner talking about much of our assets.
Thank you. So you see on the agenda, we have 3 separate items. They're all informational. Excuse me. The first, if you turn to page 2, is an update, a market update through the end of April. And after several months of good, strong, positive returns, the market was a bit spooked by some of the positive news related to the economy. And that may sound odd, but the positive news on the economy means that interest rate cuts are not as close as some of the market participants thought. And the other item was inflation, higher than the Fed wants. After falling from 9% in the summer of 2022, we seem to be stuck in between 3 and 4%. So it looks like some of those interest rate cuts have been pushed out. But the market is fickle, and through yesterday, after declining 4.08, the S&P 500 in the month of April, it is exactly at 0% quarter to date yesterday. So the beginning of May was a bit rosier. Those expectations for inflation and therefore interest rate cuts that I've referred to were a bit rosier. So long story short, that has more or less zeroed out the negative equity performance in the month. Interest rates have fallen a bit. So in the month of May to date, some of that negative performance that you see in fixed income in the month of April was down 2.53%. About half of that, 2/3 of it, has been recovered in the month of May. So more volatility in the market, and expect there to be more in the future as the expectations for inflation and interest rate cuts continue to change. So that's the update for April. Page 3, to change gears a little bit. Page 3, 3 through 6 is draft language for investment policy statements. We spoke at the last at least 2 meetings about watch lists and how managers are considered, behaving according to plan or not. Within your investment policy statement, there's no specific language that details what the criteria are. This language that you see on these 4 pages is sample language that we use with a number of public plans to memorialize in your investment policy statement the criteria that we would use when considering whether a manager is on the watch list or not. And this language here is comprehensive. You can think of it in terms of the criteria, in terms of qualitative and quantitative. I'm turning to page 4. What's labeled here, manager probation policy, that's really some of the specific guidelines related to, and again, this policy, I know we use the word watch list, but it has several different criteria based on how, let's say, how many issues a manager is having. You can be on monitor, which is the lowest level of review, watch list, or comprehensive review, where we would really, pull it apart, kick the tires, and deliver a recommendation. So if you continue turning through page 5, that continues with the criteria. Again, some quantitative and some qualitative, and finishes up on page 6, outlining what comprehensive review entails. So this is a sample for your review. We can certainly include language like this or this language itself within your investment policy. But we can talk about it at the next meeting. I would appreciate any of your comments, feedback on how to include this in your investment policy.
I have a quick question.
Yes.
Thank you for doing this. This is something I've really wanted, other members know this. I've been asking for this for a long time. Now, throughout every step of this, will the board be notified when a manager is on every single step of this policy?
Yes,
All right, that's my only question. Thank you very much.
absolutely.
Thank you.
It would be our intent that a scorecard with the criteria and the manager's status appear in every quarterly report.
Beautiful.
Not monthly flashes, but quarterly reports.
And that's just the scorecard for the managers who are in one of these phases, or is that every manager?
As this is drafted here, this deals with the total pension. So, we want to look at the total pension and establish some criteria there and just, report back how that's doing. And then a lot of the review is on the underlying manager. So line by line, how they're doing versus the policy and stated guidelines.
So we'd see
potentially
90 scorecards in the quarterly report?
You would see 2 pages.
I think
One page in summary on the total fund,
it'd be like
one
a
page.
big matrix that would have all, so it'd be like a matrix with all these little lines, and it would have scores, and normally they're different colors. I don't know if you guys are gonna use a color system. It would be scored, and it would have all the managers listed and where they at in the rating, and then you could see over a period of time. That's just what I'm familiar with, because I've had these in other funds that I'm a part of, and you would see over a period of time. A lot of the ones would stay in green. You'll see the ones that start move to, yellow, orange, or red. That's my familiarity. There may be another way to present, but usually you have them all, and you keep monitor of them, and you see that on a quarterly, biannual, or some type of basis.
Yes,
That would be the fairest way to do it, so you're looking at everyone.
Yes, something very similar as just described on a one-page summary. So it would not be 90 individual
Okay.
pages.
Okay.
We would have that behind the scenes.
I hear card and I think a card.
It would be a summary page.
Okay.
So this, if adopted, I would anticipate adds 2 pages to the quarterly report.
And so is that, you said the whole investment portfolio, is that, but excluding private equity, or that's including private equity? Like, are you just What are you talking, like, what would be included?
Open for active discussion, because
Okay.
private equity is on such a lag that it may not be an apples-to-apples comparison on how it could currently be defined or potentially could
Okay.
be defined.
Okay.
I have one more point. So I'm not, and this is funny because it sounds like I'm sticking up for Ed. Ed, you can take this, but private equity, he has his IRRs, and so we get a lot of information on where they're at, like normally, but it is more difficult, I think, to monitor that, even though I would really like to see that. So I get what he's saying. Like, I'd love to have them all in there and figure out how to do it. It's just different for, right, for private equity. But the other ones, we should see it. I know when I hold this blank piece of paper up, it's like, oh, yeah, you should know what I'm talking about. It's a blank piece of paper. But when you see what they'll present, it'll be very easy, at least what I'm familiar with, very easy for us to like absorb and go, oh, here they are, here's where they're at, they're doing great, or they need to be start to look at the watch, so.
The
This is
the
very good.
intent is the individual manager scores or calculations would be done on the traditional non-private equity managers.
Okay. And so on timing, our next quarterly report is next month? Or this is a quarterly report we're about to look at?
So
Help me on timing, I'm new.
This is also open for discussion. So the quarterly report, right around now, I share it with Walt. So for the first quarter.
Okay.
When we review the reports in this meeting, we use the flash report. The quarterly report is about, at this point, 90, 100 pages. So that I share for, review, and there's individual manager pages in it. But for delivery at the meeting, we use the flash report.
So does that mean we've received the quarterly report and I just wasn't like reading my email great, or?
No,
Okay.
not yet.
Okay, but we will. So
You-
typically,
you will.
it's emailed out to the board. It's not
Yes.
discussed at a meeting.
Yeah, it's emailed to the board, then we post it to the website, too.
Okay, thank you.
Yep.
Mechanically, the quarterly reports are usually available about 45 days after the end of the calendar quarter.
Okay.
So the 1Q report, about 45 days after, middle of May.
And I know we've talked outside of board meetings about, this board historically has looked at asset numbers monthly, and that's, like, with these decent-sized reports, and that's not necessarily typical of what boards are doing. Can you speak a little bit to, like, what you see other boards, like, how often are they doing a dive at their assets, and what kind of reporting are they looking at when they do it?
Do you want to?
Where this sample language came from is actually a client that I actively work on, so I'll
Yeah.
just use them as a proxy.
Yeah.
On a monthly basis, they do meet as a board of trustees, but they serve as an investment committee to a larger group, and they review their portfolio for 2 hours every month. That is atypical of any client that I deal with. More typical, it's on a quarterly basis, and then anyone that wants to do anything intra-quarter, it's more at an investment committee level, reporting back to a bigger board.
Okay.
Ditto.
Oh, go ahead.
We meet monthly, so I like to see the stuff monthly.
That's fair. Okay.
We have to meet monthly, right?
Oh, no, I don't disagree that we have to meet monthly. I believe we have to meet monthly. Personally, I think, like, we sit down and we look at what the assets did in a lot of different ways, because the timing of our assets come in. So I feel like we're talking about what just happened in the market for the last month or month and a half really often, which, to a fair degree, I find is sort of irrelevant to the very long-term nature of a pension plan. So I just wanted to get a feel for what's done and being done. I'm not suggesting that we, at this point, do anything differently. Thank you. Okay, keep going.
Okay. So that brings up, you bring up a great point. We, and Tim as well in his conversation, we're open to any changes that the board wants. We're here to provide the board what the board wants. So if there are any changes, if once a quarter, you do want more expansive information. If in other meetings you may want less, more, we'll do whatever, whatever you desire. So through the end of the first quarter, so if you turn to page 9, you see the total fund through March 31st, year-to-date performance up 2.23%. A lot of the performance driven by the equity market, large cap, and especially large cap growth. Magnificent Seven stocks continued to drive the market forward. So U.S. equity, and again, particularly large cap, producing strong returns in the quarter. International, non-U.S., also strong positive performance, but not quite what we saw in the U.S. market. Those investments driven by value. So whereas the U.S. is driven by growth and technology, value investments, including energy and financials, contributing to the non-U.S. equity. Core fixed income has experienced some significant volatility month to month as interest rates have bounced around given the view on interest rate cuts, the Fed, and also inflation. Your portfolio has a little bit less volatility. You see in the year-to-date, more or less flat when the index was down 0.78%. High yield, that return, unfortunately, the return that's reported is missing half of the return. When we prepared the report, the returns from Federated were not Federated investors, which is half of the high yield investment, was not available. So that monthly return is more in line with the benchmark at 1.18. So I apologize for that. But again, that's a reporting function and not an issue with the manager. Private real estate, another area like fixed income where your portfolio has a bit less volatility than the market. So unfortunately, real estate is having a difficult time, but your portfolio has less general office exposure, which is the worst part of the market, still impacted by COVID effects and return to work, or as the case may be, people not returning to the office. However, other parts of the market like industrial and multifamily or apartments doing better and offsetting some of that negative performance. Infrastructure affected negatively by higher interest rates, but increasing volumes. Infrastructure, a lot of, you can think of toll roads, utilities, ports and airports, higher volumes adding to that positive performance. Private equity, I'll let Ed comment on some more specifics, but as Ed alluded to at the last meeting, less activity within private equity over the last 18-24 months as interest rates have risen. Liquid policy portfolio in line with the index, and cash. At the end of the quarter, you do get some distributions from various investments. Of course, you know, net, you need about $6 million a month to fund the benefit payments, so that will be used for the benefit payments. So those are all of my prepared comments on the portfolio and on performance. I'd be happy to answer any questions.
Yeah, Chris, just looking at that private real estate, it's really concerning. It's a lot of money. It's not even doing as well as our liquid policy. Mm-hmm. So just your thoughts about, should we pivot? Is your recommendation just to stay in this type of investment structure. Just very concerning, the negative results.
Right. So real estate was the only asset class that experienced positive performance in 2022. So 2022, everything that was liquid, stocks, bonds, was negative and strongly negative. The real estate portfolio held up during that period, produced positive returns. Right now, the market, depending on who you listen to, who you follow, may be tending towards its bottom. That is, some of the office space has been written down anywhere from 25 to 50% in some portfolios. Fortunately, you don't have, and that's the reason why the relative performance, even though it's negative, if you look over the past year, you're 8% above the index, because a lot of your investments are not in that office area. And this is also a space where the emerging manager that's in the portfolio, Washington Alliance, has a bit of a unique niche in the market and has continued to produce positive returns. So that's a longer answer. The shorter answer is we want to stay invested in real estate. The asset class is out of favor. Fortunately, your managers are doing better than the market in general. And lastly, the largest investment within that portfolio, we are in a queue and we're taking distributions from it. So it's a private investment. We asked for $20 million at some point in the past. I think it was 5 quarters ago, and we're continuing to receive distributions from it.
So we had funded like a private equity type structure, 20 million of that total 111 million?
No, it's not a private equity structure. So a lot of real estate investors, so it's a private but open-ended fund. So you make an investment at some time in the long distant past. This has been in your fund for, I believe, on the order of 20 years. Morgan Stanley Prime Property Fund.
Okay.
You invested $50 million. Well, according to the contract, anytime you want money, you can ask for it. Also, according to the contract, if it is in their management's determination in the best interest of shareholders not to liquidate the portfolio to distribute funds, they put up with or we refer to as a gate. So about 5 or 6 quarters ago, we asked for $20 million, and so did a number of other investors. So there's a queue, and we get a portion of our request on a quarterly basis.
Okay. So stay the course for now.
Stay the course for now.
Okay, thanks.
Erica, I have a question when you're done too. Okay. So I have a question about some of the funds that we have that are making maybe 1% since inception. There's a few, and I understand the categories are a little bit different. We have a few in U.S. equity. It's not U.S. equity, excuse me, let me just, a few, I'm sorry, in core fixed. We have, we have M-Stone Partners, we have FMB, which I think made 0.48 this month. We have some other ones throughout the portfolio, and I don't want to call them out particularly because, they're, institutional-wise, we've, good partners or whatever, but is there any reason why we have investments like that? These are small amounts of money in, that are making, since inception, some of these have made like 1%. Is there a philosophy or rationale, or is there a
Sure.
thought that we start to look at these and say, maybe we should look at that a little differently? I'm just asking.
Yeah. So some of the managers you're referring to are managers in the Emerging Manager Program. So if you're to focus on the asset size, that's why the asset size is small in those investments. To comment on the performance of, and I'm looking at page 11, to comment on the performance of the managers, it has been a difficult, if not, you might say, terrible time in fixed income. And if you look at the overall portfolio, for 3 years, for instance, there's negative performance. That negative performance is over 1% above the benchmark. Yes, sir.
And then also, if you look at the since inception column there, while you're looking at the manager's performance relative to their benchmark, while some may be very close, the opportunity is being matched by these managers relatively close to the benchmark. I don't want to comment on PFM's portfolio, but just looking at FNB, for example, they were hired in July 2017. Since inception, we're reporting that they've returned 1.16%, but their index over that time period has returned 1.02%.
Yeah, that's my question. Like, I was looking at, like, why would we invest in something that, you know, I mean, they've been here a long time. And I'm not mentioning, I don't want to mention that because I don't want to point that particular group out. I'm just looking at some of these ones that really, I understand we have to balance, but when you look at the overall section, right, we seem to, since inception, we're outperforming the index for the section, which is really good. And some of the other partners are doing well. It just seems that some of them, you know, throughout the portfolio, we have, you know, some investments that just, and I don't know if that's by design, but I wanted to just think about like how we're looking at it, because I don't know if like having $2 million to invest to make 1%, I don't know if that's the best use of our dollars. So that's the kind of stuff that I ask and think about.
Right.
I don't know if I'm off base, but I just was.
I mean, it's your question, like, the question I have, I think, related to what you're saying, or maybe it's the same as what you're saying is, right, like, what are these policies such that they're returning 1 or 2% in this period? Like, I get that not everything's a great investment every year. Like, when would these be great investments, or we like having things that return 1% for some reason? Steady, slow and steady.
Great questions, all of them. So fixed income is a fundamental building block of a portfolio. Your allocation to core fixed income of 13%, 13% currently, and within the investment policy, 12.5%, is relatively low for a pension plan. So we already, just, you know, compared to peers, you have a less than average allocation to fixed income. So do we like to or want to invest in an asset that returns 1% over 5 years? The answer to that is no. The answer to why, a question that wasn't asked, but why is it only 1% over the last 5 years? It's because interest rates went up over the last 18 months. Prior to that period, the returns within fixed income were in the order of 4-5%. Interest rates went up, fixed income produced negative returns. The expectation for the future at this point, and in July, when we talk about asset allocation, we'll show some expectations for the future, and fixed income are closer to 5%, because interest rates have gone from, broadly speaking, the Barclays aggregate broad fixed income market, 1.5% to over 5%. So going forward, we would expect 5%. Is 5% going to happen? I can't guarantee that there's 5%, but if interest rates go down, the value of your bond portfolio goes up. Now, I do want to say to the point of, is 2 million in an investment worth it? It's really up to the board to decide when it comes to the emerging manager portfolio, how much you want in the emerging manager portfolio, if you want an emerging manager portfolio. Those are some of the factors. When you see any of the managers that say EMWO next to it, those are in the emerging manager program, and so they're small amounts. So there's several factors, and I hope I wasn't too long-winded and also answered the question.
You did, and I just want to make certain that I am clear that these, I don't want to point out, because some of these are local companies, and they're great for the region, and they're really doing a nice job and beating the index. I was just curious, because I'm looking at some of these, and I see 1%. I'm like, that's not a lot. I understand there's a strategy, but okay, I appreciate that, thank you.
Some of that 1% on the since inception is just dumb luck of the inception date. So it's just somewhat tied to when it was incepted. If it wasn't in one of those managers, it would have been in something else that was in a low rate environment over the same time period.
Thank you.
Thank you. Are there, were you still doing your report, or are we in the question phase?
We're done.
Are there any other questions?
Unless there's any more questions, yeah. That was the end of my prepared remarks.
Well, here was one of my prepared remarks. When I saw your front page agenda, I wondered if you put that up there so the graphics wouldn't be on the front page.
But you're making Tim's day. Tim is building a case for us having a different front page.
They'll learn that Pittsburgh is its own special market. Do you need a strongly worded letter from
Yes.
from a pension board member?
Yes.
Thank you.
Thank you.
All right. Next up, we have Mr. Boyer from Asset Strategy.
If you'd kindly turn to the tab that says Reports, Asset Strategy, the first series of pages refers to the private equity market investment overview. I have a few comments related to some of these investments. Let's see. Let's start with Constitution. We had a big distribution from them because they sold off one of their fund of funds. You'll see that in a subsequent page. You also, I spoke with Corey Capital, and they have two funds in the portfolio at this time. The Black Fund is going to be, they're going to retain an investment banker to sell it, and that should be done this year, I was told. That may be subject to the value they get, but that's what I was told. In addition, this longevity fund is sometime next year that should be liquidated, he said as well. It probably has a 10-year life, but I don't think he wants to take it out to 2029. So we'll see how that develops. The other item worth noting, let's see here, is towards the last of those pages. It only has managers for half the page. And if you go to the column that says unfunded commitments, you'll see at the bottom there, it's 26 million. And it's our estimate that not all of that will get called. In most cases, it's because they're past their investment timeline. They're older funds that just are not going to call the money. You probably only have 2 or 3 managers that are still in a meaningful call period. But of the 26 million, I would imagine you'll probably not have, or you'll probably have called somewhere between 10 and 13 million total.
In all of the future. In all of the future of these funds?
Yeah.
We're not talking about
Yes,
just
of
this
all
year?
the,
Okay.
in the future, yes. Just to manage your expectation on outflows. All right, the next page goes to cash flows, which you may have seen from Walt's report. And that first page talks about year-to-date distributions from the managers. And it also shows at the bottom the calls. So from a net perspective, you've had 6.3 million in distributions, 933,000 in calls for a net inflow of 5.3 million. So directionally and trend-wise, that's very good. It's kind of actually surprising, given that have higher interest rates and so forth. The activity still seems to be, robust isn't quite the right word, but, ongoing and improving. The subsequent pages then show, for other periods, calls and distributions for either the first quarter or second quarter. And it seems as if from our calls with the managers that there's, they're ready to sell. There's just a spread between the bid and the ask, and it's going to take a little while for any deal to close, and sometimes they don't. But I think overall, the net inflows are good. I think, as I said earlier, Corey is hoping to sell the Black Fund out this year, so that could generate something on the order of $6 million. And, pardon me, let me make sure I'm looking at that correctly. Yes, $6 million. And then the longevity fund, could be 2.5 next year. So that's all a good thing.
Thank you.
Do you have any questions regarding any individual investments or the portfolio in general?
I don't, does anyone else? Jen closed her book, so no.
All right.
Thank you.
Thank you very much.
And then we also had a PFM section. I think Gary was maybe going to, sorry, not Gary. Perry was maybe going to attend online.
Perry's online. If there are any
Okay.
questions for him, yes.
Yes, I'm here. Hello, everyone.
Oh, you're very quiet to us. That's as loud as it gets? Okay. I did have a question in the PFM tab. Perry, I was wondering if in the future for the watch list, you could include some numeric information about, how they were compared to the benchmarks in the periods that had been looked at in the past that moved them to the watch list, and then what they are doing currently.
Yeah, so I can put a watch list together, and I can also, put a color coding system to it too, so you can see where they're at in the stage of the watch list.
Thank you. Are there any other questions for Perry? Any other items?
I'm sorry.
Oh, sorry, there weren't any other questions for you, Perry. Was there anything you wanted to tell us or go over?
I can definitely do that for you. I just don't have anything new to go over with you
Okay,
at this point.
okay. That sounds good. Thank you. Any other new business? Do I have a motion to adjourn?
Make that motion.
Motion seconded. I claim us adjourned. Thank you all.